Good morning, everybody. I'll kick off proceedings now. I think we've got a few people in the room now, and we're expecting a few more to come along, but I'll start the introductions and hopefully a few more people will join us very shortly. But welcome, everybody. What I'd like to do first is to acknowledge the traditional owners of the land on which this meeting is held over many lands and pay respect to their elders, both past, present, and emerging. I'm David Chambers, Head of Member Services at the Australian Investment Council, and I hope everybody is safe and well today. Thank you for taking the time out of your busy day today to take part in and attend this Emerging Leaders webinar, the final one for 2020. This is the first time that we will have some emerging leaders joining us from New Zealand, so welcome to them. Kia ora koutou. Hopefully I pronounced that properly. But today we'll be looking back over the year that was 2020, and the panel will be discussing how it will shape the future of the private capital industry in Australia and globally. I'd like to just share a bit of housekeeping with you as well. All attendees will be placed on mute for the whole of the webinar and the panel discussion section. But if you have any questions, you can type those questions into the chat box, which is on Zoom, as you're all familiar with, I'm sure, and the presenters will try and get to those questions later on in the webinar. Another first for today is that we will be holding some informal networking as part of this event. So a bit later on, following the panel discussion, we'll be breaking up into one or two smaller groups so that you can have a conversation with each other and hopefully exchange a few details. I'm not sure how many minutes we'll have, depending on time. Hopefully it's a reasonable time that everyone can have a conversation. But what you can do at that point is unmute yourselves and have your camera on show, and you can have a conversation with the people around you. If we've got time as well, we'll try and mix up the groups a bit later on. But knowing us, we'll have time pressure towards the end, but hopefully we can do that. When the breakout group is going to end as well, there'll be a timer that will come up on your screen to say 30 seconds to the end of that breakout, so you know to wrap up any conversations that you're having at that time. Again, we'll be sending a survey at the end of the session, so particularly with a couple of these new features, it'd be great to get your feedback so we can take that on board for our future events. Yeah, it should only be a couple of minutes, that survey. But today, to facilitate the panel discussion that we've got, I'm delighted to welcome Anna Shave. She's a principal at Tanara Capital. Anna is a respected senior investment professional with over 20 years experience accumulated at several blue chip organizations in Australia and New Zealand. Australia and the United States. I'm talking about New Zealanders all the time. Anna's recently been appointed to the board of directors at the Australian Investment Council as well. Welcome, Anna, and thank you for taking the time out to facilitate this Emerging Leaders group today. And I'll hand over to you now to introduce the panel and to get the conversation started. So thank you.
No worries. Thanks so much, David, and to the team at the AIC in coordinating today's event. Thanks to everyone that's joined us this morning, and looking forward to a robust discussion here across our peer group. So joining me on the panel here today, we've got Alyssa Bennett from Blackbird Ventures. Alyssa, give us a wave. Brian Brown from Fortitude Investment Partners, Hermia Leung from NAB Ventures, and Ryan Thompson from Oriens Capital. And also too wanted to welcome our peers over in New Zealand. Thanks for joining today, and appreciate you sharing your views so that we get truly sort of the Asia Pac perspective when it makes sense. So by way of context, just to sort of kick off the discussion today, the discussion we thought would be helpful just to sort of do part reflection in terms of the year that's been. And so we'll dig in on a couple of topics there. Then we'll look at sort of the current state of play here in the private capital industry, and then look forward and try and pull out our crystal balls and have a bit of a look around what are the interesting investment thematics and topics for 2021 before we close out what's been, an unusual but particularly busy year, given that none of us have been able to escape our laptops from home. So on that note, I'll open with the following question around lessons learned that during the pandemic and how we think work's changed, or investment processes or outlooks on investment. So broad question to sort of tackle initially, but I'm curious in your views, Alyssa and Hermia, in terms of key lessons that you've tackled during the pandemic, and I guess advice you're happy to share with everyone here. There you go, Alyssa.
I'm watching Hermia and we're both going off mute, on mute at the same time. So yeah, I guess I'll kick off. Firstly, I wanted to acknowledge it's obviously been such a tough year for so many people across a lot of industries. But I'd actually like to talk about a few positive lessons that I thought came out of the pandemic. So the first being, which I think I've seen, it'll be interesting to hear if people in the private equity space have seen it as well, but is the main one is de-regionalization. So the great thing about COVID was that baby boomers and Gen Xers had to learn how to use online meeting platforms. And we've really seen that VCs and founders have loved the efficiency of having those initial meetings just over Zoom. It's just a lot quicker. And although there'll always be a place for in-person meetings, especially as you get closer to making sort of final investment decisions, I think the more efficient process is definitely here to stay. And a byproduct of this is that investing will become far less regionally based, because if people don't have to jump on a plane every time they need to have a first meeting to see if they like the other person or not, it would just become more and more commonplace for everyone, which opens a lot of doors for remote founders, both nationally and internationally, which I think is really, really great. And then I have a few other examples. Let me know if you want me to jump into them, but I should leave some room for Hermia.
Completely agree with Alyssa. We made our first investment completely remotely for this year, so we didn't actually meet the founder at all. They're based in the US, so I think that's a first for us in terms of doing due diligence on a founder remotely, and doing due diligence on a company remotely. I think that will definitely change the way we work, but there's definitely still a place for face-to-face meetings. The next thing, I guess the next observation for us was we had a company that was in the retail travel sort of sector, closely aligned with Airbnb. And I think as we all experienced, the initial shock of the situation really impacted their results. And so we went into portfolio conservation mode. And then it was so nice to see all these companies pivot so quickly. And that particular company focused on domestic travel, and their sales numbers are booming. So it's just great to see all these companies being able to pivot quickly.
And Hermia, when you did the DD for the investment overseas, did you use any in-country, resources or people that you knew in your networks over there, or did you literally just do it all by video?
Yeah, we did actually. We actually had another portfolio company go meet them, but even then, that was just one meeting. So it's just changed the way we work.
Yeah, absolutely. I couldn't agree with you more. I actually heard in a meeting the other day as well that people are seeing the lack of travel, I guess, for meetings as helping offset carbon emissions as well. So less travel, not so good if you're in the aviation industry, of course, but it was a different take on it. The other thing I had sort of noted, and I'm not sure for those on the call today, but it was the importance, certainly in private capital, land, in venture and private equity, the importance of having business continuity plans. And I would say within our portfolio, 75% of the businesses had one, but jeepers, there was 25% who was scrambling to write one real time in terms of, comms, how do we deal with employees, working from home protocols, all of these sorts of things. So I would hope now, like video, that most businesses will sort of have that as a stock standard part of their governance structure. So that was just an observation from my side. So moving on then, I guess, in terms of, and Alyssa very elegantly referred to that, it has been a tough year for a lot of people, both because it was sort of a shock to the market and a macro event, but you had the health overlay as well in terms of the pandemic itself. And a lot of people have had to sort of deal with adversity, be that in business, but personally as well with family members or health matters. So I was curious to just sort of explore that for a moment and talk a bit more around challenges that you may have experienced or that you've seen during the pandemic, and I guess any hints that you've got in terms of dealing with that kind of shock event, akin to what others may have even seen during the global financial crisis. So Ryan, I'll ask you to kick this one off if I can.
Yeah, thanks, Anna. Hermia kind of summed it up when she was talking to the point previously. From my perspective, sort of the key learning through COVID could probably be summed up, by the word adaptability. Whether that be, personally, using technology and, training for sporting events, with our, Oriens Capital, the adoption of technology for all of us, work from home and continue to collaborate, during the lockdown periods, and then I think you'd find it pretty hard to come across someone or a business that hasn't had to adapt to, the way they do things during the pandemic. Other company examples, from simply, having to rearrange the office space, to having to, completely change your manufacturing, going from, say, a 10-hour day to going into 24-hour shifts, so you still need to keep your production up, but you need to keep everyone spaced apart. So, you move to a 24-hour shift so everyone can, keep doing their thing, right through to companies completely pivoting. That's sort of the drop of a hat on what they offer. Say, like a bottling company, for example, that, it's Coca-Cola line going into cafes and that sort of thing completely falls off a cliff. They just so happen to, have an alcohol bottling line there. So, they move right into hand sanitizers almost, at the drop of a hat. So it's sort of, usually pivots in that nature, are quite slow. But, when things were forced by COVID, I think it sort of brought to the fore that, just how adaptable, we are as people and, and as businesses.
Great. Thanks, Ryan. And did you want to jump in on this as well, Brian? Did you have any additional views you wanted to share here?
Yeah, sure. So I'd agree with the adaptability point. I think the only thing I'd add is most of us invest in partnerships with other folks. And I think the adaptability concept is a lot more difficult by yourself. So being forced to adapt or being required to adapt alongside somebody else makes the process more effective and efficient, because you can spend a lot of time spinning tires otherwise. And I'd say that, for us anyway, the depth of the relationship with our partners has been, shown to be very strong, and we've been very grateful for that. And so, hope that we can have more face-to-face time, because that's a difficult thing to form depth in relationships over video. And so, hope that we can get back together again to keep those relationships strong, just in case we have to be, and inevitably we will be, required to be more adaptable in future.
Yeah, I agree. And in terms of, everyone dealt with it differently. We had a couple of our team members started what I call Movember early. So, it got to sort of week 2, 3 or 4 of the lock-in, and they were growing pretty impressive beards at that point. And a few of we'll call them baby boomers, given Alyssa kindly referred to them as such, basically said, okay, now it's time to get yourselves organised and actually start presenting as if you were going into the office. And I think getting up, preparing yourselves every morning, making sure you exercise, and doing a lot of those structural things that you would otherwise be doing if we were all in the office together or attending workplaces, I think was a really important thing to get your heads around, as well as this connectivity. So connectivity virtually, but also making sure that you're checking in on your teammates and your investee companies and so on, I think was, key. And from all intents and purposes, from what we saw over here in Western Australia, but nationally as well, I would have to agree, everyone adapted very, very well. And perhaps that's part of, being Australian, people do adapt a little bit quicker than in other jurisdictions. So then moving on to industry issues or thematics, I guess, in private capital that we're seeing today, and whether that is, one of the topical things at the AIC that the AIC CEO, Yasser, has been focused on in terms of advocacy. There's some proposed legislation changes coming through for Your Super, where private capital is going to be benchmarked against indices, and what indices is sort of up for debate as we speak. But there are issues like that and changes, I guess, that are coming at us at a reasonable pace. How super funds think about liquidity in terms of planning for another pandemic-like exercise where maybe they will have members call on their superannuation unexpectedly or not as part of their typical asset allocation process, would be two that I would call out, and obviously we're all well versed in. But I was wondering if there were others that we should be talking about or starting to think about, specific to the private capital industry that may be of interest. So Brian, I'll throw that over to you if I can.
Yeah, sure. Thanks, Anna. So I'd say I'll leave those more complex issues perhaps to folks above my pay grade, and perhaps focus on stuff that perhaps we can, in our positions, hopefully start to influence a little bit more. And I'm conscious, I guess the overlay from my perspective anyway, is that some would suggest that public market multiples or pricing would be certainly higher than they have been historically, and some would suggest that those pricing allocations have been exaggerated given the cost of capital and perhaps are shifted away from fundamentals. And so I reflect often on what our role is for our investors in private markets, I think, which is to seek inefficient markets. And I think one thing that we can do, hopefully as emerging leaders in the organisations that we work with and in the industry, is try and find ways that those inefficiencies might present that might be different to the ways that our leaders may have found them in the past. And I think hopefully there's more diversity that's sort of coming through the ranks. I think the other themes that I think are worth thinking about, Alyssa touched on one before, which I think is the de-regionalisation, which I think is well put, to think about geographically. I'm passionate about this because I'm from the regions originally, but I think there's a lack of initiative and understanding of businesses that can be quite innovative in various regions. And with respect to some of the leaders of our businesses, I'm not sure that many of them have been sort of more than 10 kilometres outside of the Sydney CBD. And I think we need to think about how we can perhaps think about other ways to engage with those regional folks. And I think there are opportunities that those regional organisations sure can be a higher risk, but I think as well can be higher return, and that's why our investors seek us out. I think the other couple of points to make are on inefficiencies are to do with operating partners, and I'm conscious that we talk about this often, but I think what we can do is try and seek alternative background or alternative perspective operating partners that are perhaps more junior and therefore can be spending more time with us to learn how we work together in different roles in the organisation, not just in the CEO seat. And then finally, I'd say hopefully and thankfully several of us have had opportunities to work internationally, and in so doing should have established relationships that should be more broad, perhaps internationally. And I think that there are collaborations that we can work on. Good to hear about Hermia working on an investment in the US with a portfolio company over there. I think there are plenty of examples of folks that we should be reaching out to. And I think Hermia, perhaps you mentioned as well earlier, a good thing to come out of COVID-19, I think, is from my perspective anyway, is the open-mindedness, and usually people are willing to have a conversation, whereas you know, prior to say to somebody that might be a US-based fund that might have a similar sort of an investment theme, you typically get a lack of response. I think that open-mindedness to a chat about things is something that we need to think about, how we can invest in those relationships a bit better internationally as well.
Oh, very well said, Brian. And the deregionalisation point, you know, I'm passionate about being based over in Perth, but technology has expedited that. And then I guess the one observation I would make just to tack on is, you know, in looking to some of the regional areas, and I'm not talking about country farms necessarily, but, you know, outside of the CBD areas, there's going to be less competition, certainly from large international majors a lot of the time, because they're not on the ground and they don't have the time and or the nous to go and explore either those areas or those industries. I think that will be really, really key in terms of working up and polishing our competitive advantage and really making sure that we're playing to the strengths of you know, Australia, but also all of the wonderful expertise that we've got here across industries on the private side. So thanks so much for that, Brian. And then in terms of any other observations, Hermia, that you would like to make?
Yeah, so from a VC perspective, I think, you know, 2020 has seen no shortage of funds raising, including our friends Alyssa at Blackbird. And so, no, that's a positive sign for the industry. I guess what the data is showing a little bit is that a lot of the funds are, you know, currently in 2020 are still sort of moving towards sort of later stage companies or follow-ons. I guess what we are also seeing that we, you know, the seed stage sort of companies maybe relying on family and friends and high net worth individuals more and more. I think the movement is towards family offices really tapping the seed stage sort of investments as well. And there's definitely a part to play in terms of accelerators in the ecosystem. I think one positive sign also are corporate venture arms are coming up more and more. So we've seen Afterpay Ventures and Atlassian Ventures also launch this year. So it's a positive sign for the ecosystem and something that, you know, hopefully we can all embrace.
Yeah, I totally agree. And a lot of the ASX listed companies as well are starting to think about, you know, we saw Woolworths do a couple of venture investments, and I would never have imagined that when I, you know, kicked off 2020 calendar. So everybody is absolutely looking for innovations and how do they get exposure to that, but also, you know, what is coming down the pike in the next sort of, you know, 5 to 10 years or so in terms of different ways of conducting business. So in terms of a look forward and, you know, for the future of the private capital industry and what's going to be important to make sure that we've got, you know, a sustainable ecosystem, be it private equity, private credit, venture, and other asset classes, infra and real estate. Will really be relying on a lot of the cohort that are on the call today in terms of making sure that we're all contributing and continuing to keep it sort of as a strong asset class across the board. There has been a move to a lot of the big endowment funds and superannuation industry in increasing allocations to alternatives and to the private capital asset class. So that is there, and I guess acting as a bit of a backstop to underwrite it, but that will only remain as long as I guess investors and fund managers continue to deliver on private capital. So Lisa, I was wondering if you could touch on, I guess, any views that you have around the future of the private capital industry.
Yeah, a few things that I'll pick up on from what people said earlier, how you were talking about the sort of super funds and the role that they play in the private capital market. I think there's a real tension growing there as if you overlay that with the fact that private that companies are staying private for longer as well. So for example, Snowflake and Slack, it's actually increasing the amount of opportunity in the private capital space as well. So super funds are looking at the return profiles in private capital and obviously want to invest, but then, as you mentioned earlier, they have that tension with the government sort of mixing things up and creating a bit of uncertainty. So hopefully going forward, that the government will decide to help support private capital. And then going forward, I think another really important thing that we saw a heightened focus on this year was the importance of diversity. So specifically for private capital, this relates to the importance of diversity of thought, which comes from diversity of employees, which is everyone here is pretty diverse, which is great, comes from diversity of employees, which leads to diversity of decision making and investments and improved investment outcomes. And I think there has been a great reaction to this year. I mean, there are so many studies that time and again show the benefit of diversity of thought leading to improved outcomes. And for example, we've seen the NASDAQ recognize this recently. They've put forward a proposal where the majority of their listed companies will have to have at least 2 diverse board members, so at least 1 female and 1 from an underrepresented minority or LGBTQI, which is really, really great, and I think shows a lot of promise looking forward for the private capital industry.
Yeah, absolutely. And in terms of, diversity of thought, one topic that we talk a lot about at Tanara is cognitive bias, because it is inherently, when you're surrounded by peers and people that you know, and you're all debating an investment, and if you spend enough time, you're quite close to it, you can develop blind spots. And I think that's probably one of the key things as an investor that you've really got to be hyper aware of. Ways that we deal with that in some of our investment discussions, we'll nominate someone as the challenger, or what I would otherwise refer to as the black hat in the room. So their sole role in that discussion will be to try and find flaws in the investment thesis, or angles that perhaps we haven't thought about. None of us would have anticipated a pandemic. I'm sure that's going to be on everyone's risk list in their papers going forward, but really developing up, what could impact this business beyond the things immediately in front of us is absolutely critical. And I think whether you end up consummating the investment or not, having those discussions up front with potential investee companies is really important. The other reference point I would also say around diversity, there have been a couple here in Australia this year, but I was really pleased to see Telstra appointed a much younger board director this year. And I just thought that was fabulous in terms of they're undergoing, a large transformation, but to bring somebody on board that had a completely different skill set and demographic view of the world, I think will absolutely serve them well. There were some funds who we spoke to who just couldn't quite get their heads around that in terms of not the diversity angle, but certainly, well, how does someone that young actually have life experience or business experience? And I think for those businesses that take a bit of a risk in mixing things up and not following the same path as everybody else, they will actually benefit over the medium to longer term. So very, very pleasing, although we're probably a little behind the NASDAQ in the US, Alyssa. I would like to hope that we're getting there, and it's incumbent on all of us, I guess, put up your hand and throw yourself in front of those opportunities if they do happen to come your way. And Brian, did you have any additions that you wanted to throw in the mix here in terms of, things that you're seeing future private capital?
Yeah, I think the other thing I'd add is, so by the way, I agree with your commentary on diversity. I think the other thing is from a different perspective, which is, as we just discussed before, the public markets are seeing dislocation between fundamentals, at least in my view, on pricing. I think whether we think that's right or wrong, it's impacting the valuations at which potential investee companies see as appropriate for us to invest in. And I think accordingly, we need to be more specialized as to partners for them. And so I think the it's great that we have a vibrant private capital industry in Australia. I think that as a result of that, there's more capital chasing transactions, which we require more specialisation to be more relevant for. So, we think about the European markets and the US market and the Japanese market, and to a growing extent the Chinese market, all of which have highly specialised individuals within teams that have particular sectors and indeed subsectors and parts of life cycle within those subsectors. Whereas in Australia, we're generalists. It's fantastic for experience and it's great for diversity of exposure. But I think certainly over the next 5 to 10 years, we will be required to be more specialised. And I think that's a good thing for us as we become a more capable and value add driven private capital industry. And I think those kind of things that we can work on as hopefully emerging leaders within the industry, including trying to understand how those specializations have played out internationally and what's worked and what hasn't. Certainly, I think we can do more on that. But yeah, I think that's something that certainly I want to spend more time on in the next few years.
Yeah, fantastic. And I may just call out, if anyone has questions from the participants, please throw them in the chat function and we will tackle them as a panel here if there was anything that you particularly wanted to follow up on. But just picking up, I guess, on that point that Brian was talking about, I mean, in terms of specialist generalists, and people often ask me, what do I enjoy about what we do? And at the heart of it, it's problem solving and helping businesses and companies unlock value is what I enjoy. But one insight I guess I can share is that I learnt out of the COVID Commission, which was headed up by a fellow who is a West Australian who I used to work with. Part of the initiative, I guess, certainly in the tech industry, and I'm sure Hermia and Alyssa would see this, is a lot of our younger talent traditionally in the tech space had sort of headed off to university overseas in North America or gone to Silicon Valley or what have you, and then don't come back to Australia until much later on in their careers when they're sort of wanting the work-life balance. One of the interesting trends that we've seen and is starting to emerge as a consequence, and it's a positive, is a lot of that know-how and or potential exodus of talent that we would normally see are actually choosing to stick around and stay in Australia. And I think, again, it's sort of been a great change to what we're seeing in terms of expertise and trying to get some of that specialisation happening here in Australia, whether it's in advanced manufacturing or biotech or even ed tech. And so the emergence of some of these businesses like Atlassian, that can support some of the talent coming through for private capital is absolutely critical, I think, for us to be able to keep up, certainly in the Asia Pac region. And the reality is, flying up to Asia is almost as proximate as it is sort of getting over to the other side of Australia. So there's no excuses now, particularly with all of us working virtually. So I guess ahead of any Q&A, which will probably kick off in about 10 minutes or so, although I haven't seen anything come through on the chat function yet, we thought we'd round out and have a bit of a chat around investment thematics for 2021. So this can be as broad or as narrow as everyone would like, but key sectors, key regions, any sort of interesting thematics that you've seen come out of the past 12 months or so, or that you're starting to hear about, I'd love for you to all share with us. And Ryan is going to kindly offer to kick us off here. And preferably, Ryan, if you've got any views from New Zealand as well, I'd love to hear those for those of us not there.
Yeah, okay, cool, thank you. The first one's actually stolen, so the sort of big picture thematic of self-sufficiency. So whether it be, economies as a whole or, businesses or, right down to at the consumer end. So, us, our investee companies, we have, some exposure to this, and we look to, sort of, Scott's Miracle-Gro in the States for sort of, a bit of guidance on, that sort of home gardening space and that sort of thing, which, you know, we can sort of see as a bit of a proxy for, you know, the consumers looking to be reasonably self-sufficient. And, you know, just this morning I pulled up their, you know, the September year-end report, and you know, the commentary there is, it's almost mind-blowing, right? So, you know, their quarter-on-quarter growth in each of their, you know, their two main operating segments, you know, for Q4 were 90% and 60% for the other one. And overall for, you know, the FY20 year, they are up, you know, 30% and, you know, 70-odd% on the year prior. And, you know, this is a company that, you know, it's a $10 billion market cap. It's supplying into such a mature, well, what we think is such a mature sector. Yet, you know, they're exhibiting these really significant growth numbers. So that, you know, that sort of illustrates right there that there's just been essentially a fundamental shift in consumer behaviour right there. So yeah, so that's sort of, you know, sort of thematic number one. And then the second one that I kind of came up with, I don't know if it's much of a thematic, but more of a consideration is just the uncertainty that, you know, for investment decision making that we face. You know, Brian's touched on it a couple of times around, you know, the fundamentals of the public markets and that sort of thing. And, you know, I'm going to quote some New Zealand stats here. So sorry to all the Aussies, which is everyone on this call but me. You know, so the NZX 50 is, you know, it's at its peak. We're seeing a general, you know, asset price, you know, like crazy asset price inflation at the moment. And this is happening simultaneous with the largest jump in unemployment that we've seen, well, in, you know, 15 years, which, you know, when I say 15 years, that's just the data set that I looked at, you know. So those things shouldn't, you know, we shouldn't be saying those things in a sentence together. You know, so it's just, is that, as Brian said, is that, you know, is that the public markets moving away from their fundamentals, or is it COVID bringing to the fore that our economies have actually fundamentally changed in you know, what drives them? You know, be it, you know, yes, it could be the low interest rates, you know, and that sort of thing, but, you know, are we starting to see, you know, a complete shift in the drivers of our economy, you know, a bigger white collar, blue collar gap, you know, those kind of things, you know, is something bigger changing that, you know, that no one has put their finger on yet, you know. So that, I'd say that would probably be the largest overarching thematic that we're thinking about from an investor perspective at the moment.
And Ryan, have you had many people, either in the industry or other, reach out to you all to get a sense for what is happening in New Zealand? So during the pandemic, did you find that the connectivity was better and people trying to get a handle on, you know, what the next 6 or 12 months looks like over there?
Yeah, well, it was actually, it sort of fell, you know, quite a bad time for us, you know, right at a March year end when we're trying to go through audits with all of our valuations and that sort of thing, you know. So it took us like 3 times as long to get audit clearance, basically, you know, because trying to get clarity of an outlook for, you know, at the time 5 investee companies, you know, at the sort of peak of uncertainty, you know, we found pretty difficult. But in terms of, you know, people, you know, coming to me and that sort of thing, probably, you know, not so much, you know, mainly just, you know, at the business level.
Got it. Okay. And Elisa, did you have any views in terms of things that we should all be thinking about as we go into the Christmas break here and come back thinking about where we're going to deploy capital or what we would do differently for the year ahead?
Yeah, well, I was thinking about this, and then the more I thought about it, the more I realized in the VC space, particularly, it's less about the next year and more about the next 10 years and what the world will look like in 2030. So one sort of, I don't know, controversial pie in the sky thing I've been thinking about lately is I believe that technology will have a second wave of impact on social interaction. So what I mean by that is the last wave, we saw the impacts of Facebook and how it changed the way people interact socially. And then the likes of Tinder changed the way of how people meet and build relationships. And then I feel over the last few years, we have seen the early signs of a second wave of impact from technology on social interaction. If you look at the likes of Pokemon Go or TikTok or Among Us, these have all had certain impacts, but none of them have really transcended demographics. So I'm thinking in the next 10 years, we'll see another big wave that's yet to come, which will create a sort of fuller societal shift in behaviours and social norms. So I'm thinking more about the next 10 years, but that's my thoughts.
Fantastic. I will know who to call then when I'm trying to contemplate what I'm going to be doing in 10 years from now.
Yeah.
Thanks, Elisa. Hermia.
Yes, so the thematic that we have been focused on and will continue to be focused on for 2021 is cybersecurity. And that word is thrown out a lot, but it really has been a big sector, for VCs and, private capital alike. The AustCyber report that was released this week just noted that the spending on cybersecurity in Australia was $5.6 billion and forecast to grow to $7.6 billion. So it's a huge industry. What we're focused on is both offense and defense. So defense on the fact that anything that is B2B, cloud-based solutions can be deployed remotely to protect, employees and customers. That's a big focus for us. And then the second thing, in terms of the offense side, is we look quite heavily around ethical hacking as well. So trying to stay sort of one step ahead of the not so ethical hackers.
Yeah, and look, we've seen that with Twitter, haven't we, over the year, particularly with the US elections and other things. They could certainly do with some upgrades in that area, and in fact, I'm sure that they are contemplating that. So look, great points. I guess the only two other thematics that I would throw in the mix with the team here would be this concept of self-sustainability, and I think every region or country around the world will be thinking about this. So examples were in terms of obtaining enough PPE and medical supplies. People were actually forced to think about trace back to where are these core pieces of equipment or medical reserves actually sourced from, and how would we deal in a situation where we couldn't source them anymore. So procurement solutions, developing up strategic alliances around different sectors, and how do countries like Australia or even areas throughout Asia become more self-sustainable for when you do have these sort of market shocks or things come out of left field. So we're starting to think a lot about that. Beyond just simply, agriculture and medical, there are other areas of self-sustainability that I think people will be moving to, and comms and cyber is one of those. And then mobility as well, this whole concept of, can I be mobile? Can a whole population be mobile? Do we need bricks and mortar? And this is not simply just working from home, but, how ordering takeaway, how do we do that versus going and doing my groceries in person, telehealth, virtual meetings, even the tourism industry was amazing. I mean, we talked a little bit around pivoting earlier, and how businesses adapted, but there were zoos offering virtual tours for kids that were at home and couldn't be at school. I thought those kinds of sort of innovations were something that we probably could have had years ago for people that can't physically get on planes. So all of those sorts of things will be interesting, and at the fore, I guess the trick will be finding those businesses or those opportunities that are still fundamentally value oriented and not overpriced. Now we will move into the Q&A section of our discussion today. It's only a short one. It's for about 10 minutes or so. Please go ahead and pop your questions in. I've got one here just to kick us off, but for the panel members in particular, so we'll go around the houses here, and Ryan will kick off with yourself. But have you been given more or less opportunities than what you had otherwise anticipated as a result of the pandemic? And
that's an easy one to answer, actually. A big yes on that one, because we operate, we've got a small team of 4, and I'm sure it's, it's been pretty similar across the board, but, we have just been flat out busy, basically since, day one of the first lockdown, be it, trying to, work with existing investee companies to sort out, business continuity plans, et cetera, right through now to, just ongoing, sort of investment duties and that sort of thing. So in a small team of 4, I'm the one sort of junior in the team as such. So I think I've been given a big opportunity to just step up and take on some of the workload from the executives.
hey, Brian.
Yeah, definitely. I agree with Ryan. Certainly, we spent the first 6 to 8 weeks, I would say, preparing for the worst, and are grateful that we did. But we've been impressed as to the performance of the portfolio, and really privileged to see the teams that we worked with really dig in. And we had to have those discussions that drew on those depth of relationships in the beginning about guys, you got to dig in here. I don't care if you have these problems. We just have to do what we have to do. And people who work with in portfolio businesses took enormous reductions in their compensation and personal sacrifices that we will be forever grateful for. As a result of that, we feel as though the portfolio that we manage is in very good shape. And I think hopefully the way that we communicated with investors, which was very deeply and very regularly, we certainly intended to get greater visibility and transparency and therefore trust from the investors. And we're seeing that that's so far, come through encouragingly with plenty of opportunities, both from investors and on the buy side.
Yeah, and I guess it's like anything in life, it's when the chips are down or there are a few challenges, how do people respond to that? And that old sink or swim mentality. And I think for the most part, people have adapted, but they, as you rightly put, a lot of people have made sacrifices for the betterment either of their businesses or their families. So, I would respect that point immensely. Hermia.
Yeah, I mean, can't agree more with these guys. Definitely more, I think, during sort of during COVID, it was all hands on deck. So it's everyone had to step up and help both our portfolio as well as origination sort of activities.
Elisa, rounding out the panel here.
Yeah, I mean, very similar to everyone else. Definitely, I was given a lot more responsibility. I actually only had 1 week in the office before everything went into lockdown. So I definitely wasn't expecting to have 2 weeks into the job as much responsibility as I was given. And then another thing that I found was because everything did move to be online, it was free to just include juniors in the team in sort of important board meetings and things like that. So I don't know if everyone saw, but Amazon acquired Zoox, which was one of our portfolio companies. And I got to be a fly on the wall with discussions with board members, which no one would have ever flown me to the other side of the world to be a fly on the wall. So to hear those discussions is like pretty awesome and something I'll probably always remember. So I think definitely a lot more responsibility for juniors as a result.
Yeah, fantastic. And in terms of then, because what I heard then amongst some of those other great points was work. Sorry, there I lost my audio. Work-life balance was potentially compromised a little, and it was work balance. Do you feel like that's normalized a little bit now? Do you think that expectations are that, because you're not traveling to and from the office and that you can simply join a meeting by a click of a button, that there's a higher expectation in terms of productivity and output generally day to day? Or do you feel like there's the converse argument to that is No, actually, Anna, we've got a lot more flexibility because, you know, I can simply, you know, go for a quick run in the middle of the day, or, you know, go and make my lunch, which I otherwise couldn't do, or work flexibly now 1 or 2 days from home and a couple of days in the office. I guess be interested in anyone's observations around that work-life balance point.
Yeah, I'm happy to jump in. We actually saw with a lot of our portfolio companies that, as you mentioned, flexibility led to substantially increased productivity. So a few companies were having to increase their incentive payouts, which is great. But then, as you said, it has brought on a broader question around employee well-being, because we saw it across our portfolio companies. Productivity went up, but well-being definitely went down. And that's because there's just no sort of clear distinction between work and home. So I think in the coming years, this definitely creates space for sort of more work collaboration and wellness tools. And I think we're also fortunate that this has happened now, because 10 years ago, no one was really even talking about employee well-being, whereas at least now people are already thinking about it. They'll see it begin to dip and then start thinking about what we can do.
Yeah, I'd say as well, it increases the importance of the Christmas break. You know, we've had a lot of conversations with people we work with, and just said, you know, conscious things are busy, but this is important to spend a bit of time with your families. And for those folks that we work with in Melbourne, it's not within your, you know, your 200 square metre apartment. Guys, get out there and, you know, go for a walk in the trees. And I respect a lot of the sacrifices in particular those folks have gone through. So yeah, I think it increases the weight of a good break, and hopefully it can be a productive economic break as well as a productive wellbeing break.
Yeah, absolutely. All right. Well, before we go off into our breakout groups, any New Year's resolutions that people have for 2021?
Yeah, on that point, I'm just going to be better about managing my calendar for 2021. I think it's super important, as you guys, you know, have all mentioned, well-being is really important. So make sure you have some structure and get those Zoom, like a break from Zoom, or a break from just at your computer all day. So I'm going to get better at that for sure.
So formally schedule in breakout time.
Yeah, so I'll throw, sorry, Ryan. I'll throw one in really quickly. I think, and not a bad point to talk to Ryan. I think we need to do a better job of international relationships as folks in Australian private equity. And so, Ryan, I'll bring out to you. But then as well, I think that there are folks broadly internationally that we need to be open-minded to singing out to, because I think there are things that we can learn, and hopefully them from us. So for me, next year, I would like to broaden and strengthen international relationships in private capital.
Sounds good. Well, step one, you just fire me an invite on LinkedIn, and there you go, you're underway.
Thank you.
You guys can do a virtual Ironman together, given Ryan's in training, something like that. Okay, well, we will call it there for the moment, if that's okay with everyone. Hopefully there's been a few helpful snippets there from the panel. I certainly learned a couple of things from the team here. We're going to move into our breakout session part of the morning. The AIC team will group us into 2 groups, and it's going to be a really informal session in terms of just an opportunity to connect with some of your peers. And so after about 10 or 15 minutes, we'll all come back for the close. So I'll hand it over to the AIC from here.